History repeats itself, people repeat itself. The market is just watching people. So when you actually go back in time, you just studying people, not candlesticks, not the charts, you studying people. For the past 2 years, I've been losing money consistently in the markets. And in today's video, I'm going to show you the exact strategy that allowed me to earn over $300,000 in funding in 2024 and how you can do the same. But before we get into it, let me show and tell you my story so you can become a professional trader with professional profits. And if you are new to the channel, welcome to the professional team. If you don't know me, my name is Divine. I am on my way to make my first 6 figures in the financial markets, futures market to be exact. And if you don't know, I've been trading for almost 4 years. I'm in my 3rd year and I've been driven and hit with constant failure throughout the time because I am self-taught. Hours, 14 to 16 hours studying the market, studying YouTube University. Most of everything that I learned was through YouTube University. And I know a lot of y'all too, like now, watching channels and stuff, that's what you do. And it is good to actually arm yourself with knowledge. But what I didn't know was the things that lied ahead of me. One of the things that I dealt with was going for fundings. So nobody ever preached, get a personal account or focus on demo for 6 to 12 months and then go into an actual live. I was out the gate forex market trying to go fund it, and I ended up failing over 60 to 70 fundings, which wasn't beneficial for me. But what it did teach me was how the things that I needed. It taught me the things that I needed to align. And most people like yourself, if not, go through trading without a plan, without an edge. As traders, we are meant to have an edge, and we must have things in order that will help us and guide us in the right direction. A quick analogy for you was, if you go to a park, when I was a kid, I used to go to the park and I used to enjoy it. But one of my favorite things besides a swing or jumping off a slide was a seesaw. And the seesaw, you go up and down, you move back and forth. It's like waves in the ocean. I don't surf, I'm from New York, but you know what I'm saying? That's what it was like. And my trading began to be the same exact thing. And I started to see how I was just up, down, break even, profitable, non-profitable, losing accounts, growing accounts, passing accounts, getting payouts, not, So it was just this up and down constant. And I had to reevaluate a few things with my psyche, my mental, but also with my actual plan and edge. And if you don't have an edge, that's what I'm going to give to you today in this video. So make sure you stay later to the video, but more so, spending 14 hours on the charts or spending 14 hours on YouTube or whatever it is, or attempting non-stop funders. We not here to get funded. We here to get money. I want to earn $300,000 in profit. So that's what I'm here to actually help all of us. We all in the same boat. We all want to grow, but I'm here to help us all actually develop a plan and go from there. So when you want to level out a strategy, 3 things that I'm going to always start with. And those first 3 things are risk management, right? It is the most important thing that you need to establish. And that is, what times do I trade? How much am I risking per trade? How much do I want to gain per trade, which is our RR, and then how much am I willing to risk if I lose that and I close my account and I shut down? If you have $1,000 account and you're willing to risk half of that account, 500, I wouldn't recommend it, but let's just say half, then you lose 500. You got to be understanding and disciplined enough to close that account down and sit down for the rest of the day. But you also have to be disciplined. If you have $1,000 account, you risk 500, you go 1 or 2 to make 1,000, and then you actually make that 1,000, and you got to be disciplined enough to sit down, close the account, and understand that, hey, I hit my targets, I'm where I need to be, and I don't need to move further ahead. So the next thing you want to establish is the session, the market, and the time frames that you actually trade. The session, for me, futures, I trade New York session, but New York session is really from like 6 a.m., 5 a.m. Eastern Standard all the way to about 4 p.m. Eastern Standard. So that's a lot of time, and you also need to dial that down if you ask me. So in my professional opinion, for my professionals, I trade New York session from 7:30 Central Standard Time, my time, all the way to 10 o'clock Central Standard. So that's really 8:30 Eastern Standard all the way to 11:30 Eastern Standard. So I give myself a 3-hour window. I could be in a trade and it could go further into 2, 3 o'clock. But if for some reason that trade I don't find a setup, or after 10:30 my time, I actually stop. I'm done. I'm good for the day. I'll just come back the next day and execute. That's very, very important. The second thing you need to focus on is your time frames, right? So your time frame is, hey, do I trade the daily? Am I a day trader? Am I a swing trader? Am I a position trader? Whatever it is, am I a scalper? If you are a day trader, I would look at the daily, the 4 hour, to 1 hour, and then you could go as low as the 5 minute. It all depends on the person. If you're a scalper, I will go from the 1 or 4 hour all the way down to the 5 to 1 minute. If you are a swing trader, I would look at the monthly to the 4 hour, and maybe enter on the 1 hour if you got it like that. You know what I'm saying? So it all depends on the time frames that you want, but don't be somebody who clicks through every time frame. Keep the time frames the same, because when you collect data and when you back test and when you gather information on your win percentage and all these things, you want to be able to stick to the same plan. You want to be able to know exactly the things you pay attention to and what you utilize. That way you can stay consistent. So like I said before, we are going to go over my checklist for my entry and exit criteria. As you can see right here on the charts, we have our entry criteria, and I'll give you an explanation. Now, make sure you stay tuned, because after this, I'm going to go over a few examples, and I'm going to give you guys something that I want you to do that's going to help all of us actually grow this year and keep each other accountable. But without further ado, so for my entry criteria, keep it very simple for y'all. My job here is to make trading as simple for you and turn you to a professional. That's my job for me, and it's my job for you. And I'm going to do that because it ain't a lot of people out here genuinely trying to help traders grow and become a better person, and that's what I'm here to do. So I got you. So for our entry criteria, the 1 hour time frame, I'm always on the 1 hour. Now I look at the daily, but as far as my entries, I align the daily and the 1 hour time frame together. I need a liquidity sweep. If you don't know what a liquidity sweep is, you can go on my channel and watch, but I also will break down something very simple to the point in this video as well, so stay tuned for that as well. Displacement and a sharp move. Now, if we actually look at displacement and liquidity, those things go hand in hand, which you'll realize a little bit later. Premium and discount, PD, whatever, that's just making sure we're not buying in the premium, because you never want to buy a car at a premium price. You want to sell a car at a premium price. You want to buy a car at a discounted price. So when we want to buy the market, we want to buy in the discount. When we want to sell the market, we want to sell in the premium. Buy low, sell high. It's that simple. And then clear direction is simply just, I want to make sure the market is trending in one direction. I don't need sideways action. I don't trade sideways action. I know how to, and I know what to expect from sideways action, but I don't trade it. And then the last thing is just have a nice supply and demand level. That's how I align my dailies, or my 4 hour, my 1 hour, whatever it is, my 1 hour, my 5 minute. I want to have a nice supply and demand level that I'm trading off, not just an empty space. And if it is an empty space, like around the 50% below it or above it, then I want to see a level that of demand, and then out into the market. And then my exit rules and management is not necessarily exit rules. When I get in the trade, I trust the process, but I'm looking for clear targets. Those targets need to be a 1 or 2 target. It need to be a clear liquidity level. Most of the time, when I say liquidity level, that means double tops, double bottoms, trend lines. That means somewhere where its orders in the market rested, and I know price may or may not want to go there, but it's a higher probability that price does. So before I even get in the market, I'm looking for liquidity levels to get in to my trade to target. Same thing with Asia high and low. If you don't know what that is, I can show you, but I have videos on it. Won't go too much in depth on that. Weak highs and weak lows, again, very complex stuff, but it's very simple for me. I want to make this simple, so I'm going to show you what a weak high and low is. It's very simple, really, if you think about it. And then midnight price is a tool I use that I learned from ICT. It's just every day at 12 a.m., wherever the market open, I get a line across my chart, and it actually shows me where the liquidity is in the market, essentially, where the order is being built up. If price opens at 12 a.m. at 23,000 on NAS, and then it flies to 24,000, I know when price gets back to that midnight price, it's a lot of liquidity to buy from there. But I also know if I'm selling the market, I can sell to that level because it's near, and that's where players might step into the market. So price would be a little bit more likely to maneuver and gravitate towards that level. So without further ado, man, let's get straight to the charts. Before we get into that, do one thing for me. I want everybody to take, because I want this to, you know what I mean? I got y'all. I'm telling y'all, all 2025. I want y'all to take your current strategy, try to develop it into a small checklist for entry and exits. Once you do that, drop a comment in down below. That way I can go look at those entry and exit things. Tell me, your strategy a little bit, and then I'll actually give you some feedback on how you can adjust it or whatever it is, or ask you some questions that will help you grow. Because most of the time we just need somebody to challenge what we know. Just like I want y'all to challenge me. Hey, why are you exiting here? Or why would you enter here? What is this you need? This too much. Ask those questions and be direct, because I want people to challenge my work, and I'm also going to challenge your work for the better, because it allows us to grow and allows other people to see. So make sure you create that checklist down in the comment, and then we'll get into the next one. Without further ado, let's get straight to the chart, show you an example of how I align all these things. Let's go to our daily. Boom. So when we looking at our daily, we have, it's a little crazy right now, but we do have levels that I was looking at. So as far as this wick goes, we had tapped into this nice, like, consider it an order block, consider it a nice level. We got a down candle and then a big up move. I look at that as banks push price down. We had some liquidity here that it grabbed, and then we pushed all the way up. And it may be liquidity for the future, but that's not what I'm focusing on. So we have a nice demand level on the daily. If we go over our checklist, we got a check right there. Cool. So we got our supply demand level. I'm looking at that. All right, cool. Now I'm gonna go down 4 hour and I'm gonna see, hey, okay, well, we got our demand level. This demand level, we're looking for a sweep. So usually with a sweep of liquidity, as I mentioned before, you just want to see a sharp move to the downside and then the upside, or a sharp move to the upside and the downside. In this case, we have a nice sweep of this level, right? We took this low rapidly, so we move up, we swept this low, and then you see the large candle that stepped into the market. That is not a coincidence. I consider that a sweep of liquidity. Some people consider a turtle swoop, a bounce. It does not matter. I just want to see a sharp move that takes out one strong point, and then a move that takes out the next point. In this case, as you can see, this was a point that started moving in the market, not super strong, but price got buyers in early, took them out, and then took out those sellers that stepped here, because this is a new high that made a low. Should be a strong high. It's not, or it should, instead of saying strong high, I want to keep it simple. It should be a high that holds if you wanted to sell from this point, because it did take out this level and make a new low in the market. So in another case, when you have lower lows and lower highs, these are strong highs that are holding and they are being respected. So you could say that, but yeah. So that was a liquidity sweep. So we got our demand level, our liquidity sweep. And remember, we talked about displacement or a sharp move to the upside. This is the same thing. We have that displacement. As you see, is a bunch of imbalance here. If you don't know what imbalance is, you gotta go on my channel. I can't go crazy in depth into all of that, but this is displacement, where you have that move that just like this displacement, just a sharp move in the market. You didn't expect it, but it took everybody out, and a lot of people made some money. That's it. So we have that. Then we want to look for, our 1 hour time frame. Now we also have another demand level here, because this demand level swept liquidity, made a new high, and then we come back to that level, right? So for me, now I'm going to my one hour, and I'm going to just look for an entry. Now for me, we respected this level, but then we get down here during New York session. This is beautiful, because we always want to align time. I didn't mention it, but time is the most important thing. It has to be during New York. If this happened at 11 o'clock or ish, let's see when this candle tapped. Yep. If it happened at 11, 12 o'clock, and we at this strong level, and I'm expecting prices to move to the upside, then I will more than likely get into this. In this case, where I would naturally want to enter is down in these dumps and just have a large stop loss, like so. I don't care about a large stop loss, especially when I'm moving, but I am a day trader, and then I will hold stuff as well. So in this case, if I see this large candle, I'll let price show his card, let it wick out a little bit, enter on an engulfing candle, put my stop still down here, keep it simple. I never know what price wants to do, so I just protect the low that should be protected, or the low that should not be taken. And then I would be expecting price to either come up here or come somewhere into the premium, meaning the top of this level right here, to actually activate some sellers in the market and see who's going to take control. So one thing I didn't get into yet is risk management. And the reason being is that is the most important. I will not rush over risk management, because that's going to turn you extremely profitable. So wait for that video to come out. It'll be our next video to come, and it'll be a nice interesting video, because it'll tell you about the $300,000 in funding I gained and how I actually maneuvered through that. and what I learned and what I made. The last thing I want to drop with you, don't want to keep talking to y'all, I want to get y'all to the charts, is go collect data. What I mean by going to collect data is you actually go through your charts. One second. You go through your charts and you say, hey, I want to look for my setup. You don't back test. You need to back test. That's a whole nother thing. But when you collect data, anytime, free time, take an hour, set a timer, and literally go back, just what I was doing with y'all on the charts. Go back in time, go look for your strategy on the buy side, go look for it on the sell side. What I have entered here, what time of day, what day is it? Oh, is this a slow time of the season? You get to journal the entire years in the past to actually see. History repeats itself, people repeat itself. The market is just watching people. So when you actually go back in time, you just studying people, not candlesticks, not the charts. You studying people. All right. So make sure you collect data. It is the most important thing besides risk management, because you want to have confidence behind what you are actually implementing in the video. Whether you are a beginner trader, better trader than me, it does not matter. Most people don't have a strategy and an edge planned out to actually execute at a high level and allow it to play out over time. And the most important thing you need is an edge, understanding your win rate, your strike rate, and understanding what you need to do differently, what you do better, and what you need to completely eliminate. Now, with that being said, you guys need to understand that you are professional traders. You need to understand that the only way to become that is to see yourself as that and to actually adjust your characteristics to become that kind of person, become that kind of trader. What you do in trading, what you do as far as what you eat, how you think, how you see people, how you perceive the world, will actually display in these charts. So if you want to actually be a professional, profitable trader, you must start with the simple things, but actually become a professional at those simple things. The charts are beautiful. You need to understand them, but you need to understand you most importantly. Understand that. So without further ado, I appreciate y'all. Hit the like button, hit the comment button, hit the subscribe button. It ain't even no comment button. Leave a comment. I love y'all, and I'll see y'all.